Welcome back to CMG Oral Space online lessons. This is a masterclass on candlestick patterns, right? Mastering your candlestick patterns. And then we are on episode 7, right? If this is your first time of watching this video, you have to go back and then start from the beginning of the series so that you can have better understanding of whatever we are doing here. And then thank you very much for being patient and then following through this class. We really appreciate you. We also plead that you follow us, you subscribe and follow us, and then like our videos so that we can do more videos for you. Thank you very much. So on this episode, we are going to treat the pin bars, right? The pin bars. The pin bars is, I think, is usually they are made up of two types. We have two types of them. We have the hammer. We have the hammer, and then we have the opposite of the hammer, right? We have the hammer, the pin bars. So when the pin is reversed, we have the other one, right? So we have the hammer, and then we have the other type. So this video is basically going to treat the pin bars. Good. So the first one is what? The hammer. So the hammer pin bar, it looks similar to the dragonfly doji. If you have not watched the video on doji, the candlestick pattern, I think you have to go back and then watch that one. That episode is on episode 5. So you can check that on doji, the doji type of candlesticks, right? So the hammer is similar to the doji. Just that for the doji looks like this. The doji, in fact, the dragonfly doji, right? I should say the hammer looks like the dragonfly doji instead. Take note. The dragonfly doji looks something like this, right? Like the cross, right? Usually almost near the top, right? Price actually opens and closes around the top, or even at the top like this. It could be of that type. So it's the cross type. That is the dragonfly doji. And then when you look at the hammer looks like this. It's actually what? A hammer. The hammer looks like this. So it means that the simplicity here, get it, and then I think if you are able to get the concept here, the psychology here, I think the reading will be easier for you. It will only serve as a revision, right? So the dragonfly, the price opens and closes around or almost the same point, right? Price opens and closes almost around the same point, like this. That's why you just draw and then cross through, right? It's something of this sort. Now for the hammer, the price opens and closes not around the same place. There's there's some form of what? A gap, right? There's some form of a gap between. The area is a bit wider or bigger, right? Now for the dragonfly, very close, almost at the same point. So the hammer, there's a bit gap, there's a bit space between it, right? So that is it. Now we also said that the dragonfly doji is a bullish type, right? In the same way, the hammer is what? A bullish type. Get it? They are similar, almost the same. Whatever they do, almost the same, right? The dragonfly doji is a bullish type, and then the hammer also is a bullish type. So I like to teach with a simple analogy. You see the hammer that we use, the carpenters use in their work as their tool. Look at the way it looks like, right? The force or the point that is actually used in nailing is at the top, right? So that is it. So that's the hammer for you. It's as simple as that. So their impact or their meaning, whatever they do, their functions, almost the same. So that is it. So let's get back. Let's get in. The hammer candlestick is created when the open high and close are roughly the same price. They are almost or roughly around the same price, but not the same place. It is also characterized by a long lower shadow, long lower shadow, long lower shadow. That indicates a bullish rejection, a bullish, a long what? Lower shadow, meaning price opens here, that's a bullish type. So let's say this is a bullish candle. Price opens here, move down by the power of the sellers, right? The sellers try to move the market down. I'm giving the psychology behind this candlestick formation. That's what I'm doing now. So price opens here, it moves down here with the help of all the sellers. And the bulls come back. That's the buyers with extra money, extra force, momentum. And then what? They push the market up to this level. Now, when you get here, the sellers will say that no, we are not going to agree to this fight, to this losing. So they also come back and try to push the market down. But when they get here, then I think their power gets exhausted, and then the market what closes here. Sorry, closes here. So that is the psychology behind it. It's as simple as that. I'm not going to talk much on this hammer, but it looks similar to that of the dragonfly doji. So that is it. The hammer for you. This is the example. This is a perfect picture. Not the movie, perfect picture, but this is a perfect illustration, a representation of the hammer, timber. So that is it. I think there's a grammatical, the wrong spelling here. So it means what? Little or no upper shadow. That is what it means. So normally no till here. Nothing forms at the top. There are times you can also find it, like the hammer. So that is it, like the physical hammer that you use. So the opening is around here. It's a bullish type. So we are assuming that this is a green candle. The opening is here, and then the what? The closing is at the top. Now bear in mind that, like I said, the color here does not matter. In fact, a bearish candle can actually be this way. Sorry. Sorry for that interruption. A bearish candle can actually also be this way, right? It can also be what? Red. It can actually be what? Red, right? So that is it. So the color does not really matter, but we are looking at the psychology, right, behind this formation. That is what happens. Price opens, they move down, then they come back to this level, and then it closes. So that is the idea. So this candle can actually be what? A red candle or a bearish candle. But when it happens that way, the only difference is that, meaning that if this is a bearish one, meaning the opening was not here, the opening price was not here, but the opening price was actually what? Here. The opening price was actually here. And then the closing came down. So that's the only difference. So just look at this from that point of view. It's as simple as that. So in this, it has what? The long lower shadow. It has a long lower shadow with little or no upper shadow. So that is it. Now the hammer is a reversal candlestick pattern when it occurs at the bottom of a downtrend, right? So if it is bullish and then it happens what? At the bottom of a downtrend, what it means is that prices are going to be what? Be reversed, right? Like the what? The dragonfly, the doji one. It happens at the bottom, price will move up because it's the bullish candlestick type pattern. So that is it. Now, this kind of forms when sellers push the market lower after the open, right? They push the market lower after the open, like we just illustrated above. They push the market lower after the market opens, but they get rejected by buyers. The buyers come in again, fighting against the sellers to move the market what? A bit closer above the opening point, right? So the market closes higher than the lowest price. So that is it. So let us look at the places that when they form, they have impact. Illustration. So market generally moving what? Down. Market moving down until what? they meet a resistance level, then this one forms, right? So this one forms at the resistance level. It forms at the resistance level at the bottom of what? The downtrend. Then boom, market what? Moves in the what? The opposite direction, moves up massively, strongly. Now, as you can see, the market was trending down. The formation of the hammer or the pin bar was significant reversal pattern. The long shadow represents the high buying pressure from this point. Sellers was trying to push the market lower, right? They were trying to push the market lower generally, but in that level, the buying power was more powerful than the selling pressure, which results in the trend reversal. The most important to understand, the most important thing to understand is the psychology behind the formation of this pattern. So when you say the psychology, what actually happens when the market opens and then closes? So within these two time frames, what happens, right? A candlestick will open and then close. But it doesn't open and just close at that moment or that time. There are a lot of things that happen. The forces, the fight, the struggle, the tug of war between the buyers and what? The sellers, until the final decision is made by the strong force. So that is it. Now, here, we will talk about how to trade this pattern and how to filter the signal in the next chapters, right? We actually learn how to trade them because when you look at the overview of this series, we told you that we are going to identify them and then we also learn about how to trade them because the main purpose of this is to do your analysis and then what you trade them, right? So after seeing the pattern, we have different types of strategies, especially one of them is the pin bar strategy. We have the pin bar strategies. We even have the pin bar, the false breakout strategy. We have a lot of them, right? So we have a look at them in depth. Now, we move back, we continue to the next type of what, the pin bar. So the one that we just looked at was the hammer. The hammer with the force at the top, right? Now, conversely, the shooting star, we are shooting, the shooting star is the opposite, right? The shooting star is the opposite. And that is what a bearish pin bar, because the other one was a bullish pin bar. So logically, the bearish pin bar would be what? The downwards one, as in the shooting star. To get the names in your head, so that when you're referring to them, talking about them, it will be easy, right? Now the shooting star, the shooting formation is formed when the open low and close are roughly at the same price. Roughly means they are not the same, but roughly around. So that is why you see the gap between the opening and then the closing. So that is roughly. This candle is characterized by a small body, right? Small, but the body is very small, and a long upper shadow. Look at it, the shadow, very long for the wick. It is the bearish version of the hammer, meaning the opposite of that, the bearish form. If the other one's a bullish, the next one automatically or logically is going to be the what? The bearish one. Professional technicians say that the shadow should be twice the length of the real body, right? This is the length of the body. The length of the body, right? Or the height. And then they are saying, the professionals are saying that it should be twice of that. So this, let's say if this is 5 inches of that sort, that means this should be what? 10 of that. So this should be what? 10 inches. Whatever units are you prefer to use. So 10 what? Inches. That's what they are saying, right? So it means that when you see in that long things, in that long length, that is going to have a powerful impact on the market, on the move. So that's what they mean. So we're looking at the example, in fact, the diagram. This is how it looks like, right? Opens here, it's a bearish one, so it opens here and then closes here, right? Like I said earlier, the color does not really matter. In fact, this candle could also close green, or also close a bullish, or in fact, a white one, right? But we are talking about what the psychology behind it, what actually happens, right? So we are looking at the candle, but not really the color. We are just using the colors so that you understand them what even better, right? So it means that a bullish candle could actually close here, close like this. But we are talking about what the psychology behind this. So that is the important thing that we are looking at. Good. Now, let's continue. The illustration above shows us a perfect shooting star with a real small body and an upper long shadow. When this pattern occurs in an uptrend, right? When this occurs in an uptrend, it indicates a bearish reversal signal. If it happens at the top, market is going to move down. The psychology behind the formation of this pattern is that buyers try to push the market higher, but they got rejected by a selling pressure, right? You look at the diagram, example, you understand. When this candle forms near a resistance level, right? A resistance level, it should be taken as a high probability setup. Good, right? So this is what we are talking about. This is what? This is a pattern, the shooting star, right? The opposite of the morning star, right? And then we were saying that when you see this thing, this formation, this pattern forming at the top of an uptrend at the resistance level, that is a higher probability setup, which you should not take it lightly. When you see it with some few confluence factors, boom, you enter the market sharp, make your money, take your profits, and then you go your way. That is it. So market moves in this way. Then when this forms in the red box, then boom, it moves down. That's what it was talking about. The chart above shows a nice shooting star at the end of an uptrend. The formation of this pattern indicates the end of the uptrend move and the beginning of a new downtrend. This candlestick pattern can be used with support and resistance, supply and demand areas, with technical indicators, right? We talk about technical indicators, don't worry. The shooting star is very easy to identify and it's very profitable. So meaning a lot of people can even use it as their strategy, their main strategy. We have different strategies that every trader has. A trader without a strategy will not make it, because you can't make it in this profession with impulsive actions, right? You just enter the market when you think like you should enter. No strategy, no plan. No, you can't do that, right? So some people have this as their only strategy that they trade. So they watch the market for as long as it takes until they see this candlestick pattern, right? So when they see it, they enter the market straight. Then they make their money. So that is it. In the next chapters, I'll talk about this, about it in details, and I will show you step by step how to make money trading this price action pattern. That's exactly what we will do. So that will bring us to the end of this episode, right? Thank you very much for being with us. So you can go back to the previous videos and then watch them to have a very good understanding. Don't skip any of the videos. And then we also ask that you like our videos and subscribe. If any question that you want, any grievance, anything at all, you can reach us. Look in your bios or description, like our videos, and then we see you soon. Bye.